Now let's do some paper napkin math. We're just trying to understand the scale of Terafab for Tesla investors. That is still 500 million chips. The math still points to roughly 333 million accelerators. Even severe assumptions still produce numbers that's impossible to ignore. Hi. Tesla may not be building a bigger car company. Tesla may be building the infrastructure layer for physical AI. And that is why the story really matters. Because Wall Street sees cars, deliveries, margins, EPS, and price cuts. But the infrastructure tells a completely different story. It tells us Tesla is thinking about something much larger than the next quarter. It tells us Tesla is thinking about scale, and in investing, scale is often where the real story begins. Wall Street sees cars. The infrastructure tells a different story. And that story starts with a number 1 terawatt of compute capacity. But what does that number even mean? More importantly, what does that mean for Tesla and SpaceX investors like me? Today, we are going to do what we do best on this channel. We are going to use some simple paper napkin math. We are going to take that number, 1 terawatt, sounds impossibly large, and turn it into something investors can actually understand. Because once you convert terawatts into chips, the numbers become almost impossible to ignore. And that's when this stops looking like a factory story. It starts looking like an AI infrastructure story. The number that changes the entire conversation is not of vehicle deliveries. It's not gross margin. It's not even robotaxi timing. The number is greater than 1 terawatt of annual AI compute capacity. That is an absurd number. And that is exactly why it matters. Because once you ask, why would Tesla and SpaceX need this much of compute? The story stops looking like a car stock story. It starts looking like an infrastructure story. Let me put that differently. If Tesla announced a factory that could build 50 million cars a year, Wall Street would talk nothing else but this. But when Tesla talks about compute at scale that could be just as transformative, many people treat it like a side note. And that's where the opportunity lies. Because investors obsess over quarterly earnings, but the infrastructure investors obsess over capacity. Capacity tells you what a company thinks the future looks like. Most investors are watching Tesla through the normal auto lens. How many cars did Tesla deliver? What happened to average selling prices? Are margin going up or down? Those numbers matter, but they may not be the main story anymore. If Tesla's ambition is robots, autonomy, and real world AI, then the missing layer is silicon. Because you cannot build a physical AI at planetary scale without compute. And you cannot control compute if someone else controls your chips. Every industrial revolution has had a bottleneck: railroads, electricity, oil, semiconductors. Today, AI has a bottleneck too, and that's compute. The companies that control the bottleneck often capture the most value. NVIDIA figured that out, and so did TSMC. Now, the question is simple: is Tesla trying to figure that out too? Before we go any deeper, if you enjoy research driven videos on Tesla, SpaceX, AI, and long term investing, please support the channel. Hit like. On this channel, we break down complex technologies, business models, and investment ideas using simple paper napkin math. The goal is to help you better understand these opportunities. If that sounds useful, consider subscribing to this channel. And also, if you know someone who is trying to understand where the next generation of technology companies are heading, please share this video with them. And do follow us on X at Smart Tech Money. Now let's get back in. The robot gets all the attention. And I can understand why. Optimus is visual, it's exciting, it's easy to imagine. But the robot is the dream. The fab, it's the evidence. Terafab turns vague robotic dreams into a manufacturing question. You want to know how many chips, or the power, or what's the packaging like, what sort of vertical integration is present. And when you ask those questions, Tesla starts to look less like an automaker, more like a physical AI infrastructure company. Anybody can make a presentation, anybody can make a roadmap, anybody can make a promise, but infrastructure is different. Infrastructure requires commitment. You can cancel a product, but you cannot easily cancel billions of dollars worth of manufacturing ecosystem. This is the critical point. Terafab is not interesting just because it sounds big. It is interesting because it suggests a different kind of operating model. Logic is closer to design. Memory is closer to compute. Packaging and testing is closer to the feedback loop. That means faster learning, faster redesign, faster iteration. And if Tesla is serious about Optimus, Robotaxi, and AI systems, then the ability to compress that learning cycle becomes a strategic weapon. The modern worlds run on feedback loops. The faster the loop, the faster the learning. The faster the learning, the faster the advantage compounds. Tesla already did this with vehicles. Tesla already did this with batteries. Terafab may be an attempt to do this with the silicon. And now, Tesla is hiring. Hiring does not prove success, but hiring does reveal ambition. And when you see roles across lithography, deposition, implant, memory, packaging, testing, automation, it does not look like a normal supplier story anymore. It looks like Tesla is trying to understand more of the stack, not just the software stack, not just the vehicle stack. They already cracked it. This time, it's the semiconductor stack. And that matters because every layer Tesla brings closer to its own learning loop could become another source of compounding advantage. Hiring is often the earliest signal. It appears long before revenue, long before product launches, long before Wall Street starts to notice. And if you follow the hiring, follow the capital spend, follow the infrastructure, companies usually tell you what they are becoming before they actually become it. Now, here's where the story gets even more interesting. If the rough scenario is that Tesla uses around 25% of the capacity and SpaceX or related AI systems uses around 75, then this is not a normal Tesla capacity story. All of a sudden, this becomes a Tesla plus SpaceX infrastructure story. And that is fascinating because SpaceX is not just rockets. SpaceX is all about satellites, propulsion systems, orbital infrastructure, communications platform, and potentially future space based compute. So the investing question now becomes much bigger. Is Terafab just about the cars? Or is it about building the silicon backbone of the entire Musk ecosystem? Think about how strange this is. Most companies struggle to justify even a single advanced fab. Here we are discussing capacity measured in terawatts. When SpaceX enters the story, the total addressable market changes. The infrastructure changes. The ambition changes. And possibly even the valuation framework changes. Cars, robots do not need SpaceX. Rockets do not need Tesla either. But an AI infrastructure may need both. Now let's do some paper napkin math. Not because this is a forecast, it's not. We're just trying to understand the scale of Terafab for Tesla investors. If the allocation is roughly 250 gigawatt out of Terafab for Tesla, and we convert that into watts, that's 250 billion watts. Now we divide that by the different chip power assumptions. So at 200 watts, that's about 1.25 billion of AI 4 class chips presently used in the cars. At 250 watts, that is about 1 billion AI 5 class chips scheduled to go in production later in the year. At 350 watts, that's about 714 AI 6 class chips to be used in Optimus. At 500 watts, which is roughly where Terafab kicks in, that is still 500 million chips. And even at 750 watts, which is much heavier data center class assumption, the math still points to roughly 333 million accelerators. Again, the exact number is not the point. The point is the scale. Even severe assumptions still produce numbers that's impossible to ignore. The point of the math is not precision, it is the scale. If you keep changing the exact assumptions, the exact answer changes, but something interesting happens. The conclusion does not. The number remains enormous. And that is what makes Terafab worth studying. So here's my final thesis. We do not know exactly how many robots Tesla will build. We do not know how quickly AI 6 will scale. We do not know whether Terafab reaches its full ambition, but we do know one thing. Nobody builds infrastructure on this scale unless they expect demand on an entirely different scale. This is why Terafab matters. It's not a chip story. It's not a factory story either. It may be the clearest signal yet that Tesla sees a future much bigger than the Wall Street is modeling it for today. Wall Street sees the cars. Infrastructure tells you a very different story. And personally, this is why I continue building exposure to a small basket of AI focused companies. Not because I know what the next quarter looks like, certainly not because I know which product launches will succeed. And definitely, I cannot predict short term stock price movements. And so, this is not a financial advice. This is simply how I think about the next decade. And if you enjoyed the video today and the analysis we did for you, please like and share this video and subscribe to our channel. And I'll see you in the next one.